Death cross in the US dollar index? Is it going to happen? What's likely to happen next? And what are the implications for gold? Good morning, everyone. I'm Przemysław Radomski, CFA, and these are the issues that I'm going to discuss in today's video. On this chart, you can see what the US dollar index has been doing since 1999, and the orange line is the price of gold. The death cross is a technical phenomenon where the 50-day moving average moves below the 200-day moving average. Well, moving average is the arithmetic average of the last X sessions. So 50-day moving averages, 50-day moving average is the average price that the US dollar index had over the last 50 trading days. So 200-day moving average is the average of previous 200 sessions. And well, the shorter the time frame, the bigger the volatility of the moving average. So the shorter term moving averages flow and ebb more faster. And therefore, every now and then they cross each other. When the 50-day moving average crosses the 200-day moving average from the up, so it dives below it, it's a so-called death cross. And if it moves back above it, it's a so-called golden cross. And the rumor is that the death cross, as kind of you could guess based on the name, is supposed to be bearish, whereas the golden cross is supposed to be bullish. Theoretically, it makes sense, right? If something that's more volatile moves above what's less volatile, means that the market is picking up and therefore is likely to rally, right? Wrong. It means that the market already picked up. It already happened. The market already picked up, and that resulted in the shorter term moving average to move up, whereas the longer term moving average didn't move up yet, or not as significantly. Therefore, it's a tool that shows what happened in the past. Now, the question if it has any predictive ability. Does it help you to forecast the prices? And there's no other way to really answer this question than to look at the data. Look at the chart and see what's happening. Okay, what happened after the so-called death cross materialized? And that's what you exactly see. Well, that's what you see on the chart right now. The blue line, it's clearly visible over here, for example, is the 50-day moving average. You can see a legend over here in the top left corner of the chart. And the red line is the 200-day moving average. Okay, so when the blue line moves below the red line, we have a death cross. Scary, right? And there are some times where it works spectacularly well, like in the year 2002, right? After the death cross, the US dollar index then moved lower. But that was not the only time that we saw the death cross. There were many other instances. Over the past 23 years or so, we saw exactly 15 death crosses. And the question is, what happened after each of those? Were they all followed by declining US dollar index prices? Of course not. I marked those cases with horizontal dashed lines. The green ones, in my opinion, and it's subjective because whether something is a good buying opportunity or selling opportunity depends on the time frame you take, right? One could say that something rallied on a day-to-day basis, but it declined on a weekly basis, and it also rallied from a monthly basis, but declined on a quarterly basis. So which way was it, right? So I'm using my own specific judgment, and well, you can have different opinion. You can see what I marked on the chart and see for yourself if there's any predictive power in the death cross. I'm pretty sure you won't find anything reliable actually. Anyway, the green dashed lines represent situations where, in my opinion, we had good buying opportunities for the US dollar index. Right over here, US dollar index rallied, and over here it rallied, and over here it rallied. In this case, it declined. Over here, it was relatively unclear. We saw move lower, then back up, then move lower, and then some sideways trading, and the decline picked up only months thereafter. So I'm viewing this as an unclear indication. Then we saw bearish indication. Then once again an unclear one, because well, the USD index was declining sharply, but it bottomed, then moved higher in the following months, but overall didn't rally that much, so it moved kind of sideways. I'm viewing it as an unclear situation. Then we have another situation where the US dollar index moved generally lower. Then we have one where the counter trend move higher was big enough for me to view this as a good buying opportunity. Again, you can have a different opinion on that. Then we have a clear buying opportunity. Actually, that was I think, yeah, that was the low where after which we didn't see any lower prices up to date. Actually, it was very close to one, so not a sell signal here. And we saw something similar also in late 2013. We saw a good short-term buying opportunity in 2015. It was relatively unclear if the opportunity was a buying one or a selling one in case of 2016. In 2017, that was a selling opportunity, a clear one. And in 2020, actually, this line is my mistake. I will need to correct the video. Well, the chart based on this, but I'm too far in explaining all this. I want to erase the video because it doesn't change the point. Okay, obviously this over here we had a bearish indication, so this line should have been black. I get probably influenced by the implications for the gold market, which I will move to in just a second. All right, so 1, 2, 3, 4, 5, 6, 7 buy indications. All right, seven green lines. Now red ones, I will also account for this one. Okay, 1, 2, 3, 4, 5. Actually, I described this correctly on the description box. I just didn't use the correct color. So anyway, 7 buy signals, 5 sell signals. There were more buy signals from this scary death cross than there were sell signals. And yet people have the audacity to tell you that it's a sell signal, right? Without even checking how it performed. Always check the data, or make sure that it's that whoever you're following or reading or watching does that. You can't just expect to succeed in the markets if one keeps repeating what everyone says. And in the mainstream financial media, oh, a death cross is coming. It's extremely bearish, right? Death cross, right? There were a few cases where the implications were unclear. So the important takeaway here is not that the death cross is a bullish thing. It actually is slightly more bullish than bearish. However, it's completely unreliable. It's too close to 50-50. If you were tossing a coin, you would probably get something close to this efficiency. So it's pretty useless to even be talking about it. in case of the US dollar index. It's not a big deal. Whoever is about to or tries to scare you with it, well, you can use this as an opportunity to question their analysis and actually look at what else they do and question that as well. Maybe you'll find something interesting. So anyway, I told you earlier that we're going to discuss the implications for the gold market because they are actually very interesting. No wonder, because the US dollar index is one of the key price drivers for gold. Okay, let me clear the chart. And interestingly, even though gold is in a very long-term uptrend, okay, that's pretty obvious when you look at it from the over 20-year-old perspective. Despite that, the majority of US dollars death crosses were good selling opportunities for gold. So it worked more reliably for gold than for the US dollar index. It's not a crystal clear signal, but it is a quite reliable one. And that's what I marked with arrows. So that's why colors of arrows don't necessarily align. We have 1, 2, 3, 4, 5, 6, 7, 8, 9. That's the worst stroke ever. And 10 selling opportunities in gold. And only 4 buying opportunities. So there were over twice as many selling opportunities and buying opportunities. It's not 100% efficiency, but it's something that one might want to keep in mind as something supporting other indications, other signals, other techniques. So while we haven't seen the death cross in the US dollar index just yet, if we see one, it won't be something bullish for gold. It actually might be viewed as something bearish, as a confirmation that the top is in or about to be formed. What's very interesting is that when the US dollar index was during a major rally at the current levels, above the 100 level, which was over 2 decades ago, that was when US dollar index's death cross was a great buying indicator. And we actually saw it in late 1999 as a confirmation of the top in gold. And it was also a local top before a few months before the final bottom in gold took place. Well, one can argue what was the true bottom, because the prices were lower previously, but it was lower in the case of mining stocks, for example. So I would say that this was a pretty big deal that gold still declined at that time. So what are the implications now? If any, for the US dollar index, they would be more bullish than bearish. And for gold, they are actually bearish. As surprising as it may be, but that's the data that shows it. It's not an opinion. It's there. You see it in front of your eyes. And well, investment successes come from analyzing the data and not following the herd, not following your emotions on the market. So it seems that the next big opportunity is a move to the downside in the precious metal sector, even though it might be difficult to take advantage of it on an emotional level right now. And yes, it is difficult to focus on facts when things get all emotional. However, as long as you have someone that can analyze data for you in an unemotional manner, then your odds for conquering the market or thriving or at least preserving the value of a portfolio increase. Of course, I can't guarantee any kind of performance or that I or anyone else will be correct each and every time. Investment is risky, of course, and everything I said here is just my opinion only, not investment advice. Still, the outlook for the personal sector for the following weeks and months remains bearish. If you'd like to get more up-to-date information on gold, not just from me, but from other experts, please visit goldpriceforecast.com, and for silver, silverpriceforecast.com. And please subscribe if you're interested. Please subscribe to my gold trading alerts on sunshineprofits.com. And I also encourage you to visit goldenmeadow.eu for discussion of investment and trading related topics on precious metals and other topics. Thank you. Have a wonderful day. Bye-bye.